Hey everyone, welcome back to Corporate Decoder, the place where we explore the hidden secrets within corporate financial reports. And today we are diving deep into Amesite Incorporated's latest annual report, a document that promises more twists and turns than a medical drama. Their pivot to healthcare with nurse magic sounds potentially brilliant, but their financials tell a story of a company still fighting for survival. Let's decode if this is a breakthrough or a breakdown. Before we dive in, if you appreciate getting straight insights from these corporate documents and want to know the real story behind the numbers, smash that like button and subscribe. Also join our Discord community linked in the description below. It is the best place to discuss these insights and get more. Alright, let's get straight to the heart of it. Amesite Incorporated filed their annual report for the fiscal year ending the 30th of June 2025, and it paints a picture of a company in transition still trying to find its footing. Looking at their balance sheet from the 30th of June 2025, we see total assets standing at about $3.1 million. That might sound like a lot, but when you compare it to their liabilities, which are around $358,000, you can see that while they are not drowning in debt, they are also not exactly flush with cash. Their cash and cash equivalents were about $2.3 million. This is a critical number for any early stage company. It is their runway. For the year ending the 30th of June 2024, it was just over $2 million. So a slight increase, but not a massive surge. Their total current liabilities at $358,000 seem manageable. This means their short-term obligations are not overwhelming. More importantly, stockholders' equity is around $2.7 million. This is a positive sign that the owner's stake in the company is growing. Now let's look at the income statement for the years ended the 30th of June 2025 and 2024, which shows how much money they made and spent. Their net revenue for the year ending the 30th of June 2025 was a little over $110,000. Last year, it was around $166,000. This is a drop in revenue, and that is definitely not ideal. It suggests that their pivot to healthcare with nurse magic might not be bringing in the cash as quickly as they hoped, or that their older education products have faded. General and administrative expenses, which cover things like salaries for non-operational staff and legal fees, were about $2.5 million in 2025, down from $2.9 million in 2024. This is a good sign they are managing their overhead costs better. Technology and content development costs were around $691,000 in 2025 compared to over $1 million in 2024. Again, a reduction indicating a tighter focus or perhaps less development activity. Sales and marketing expenses also saw a decrease from $763,000 in 2024 to about $545,000 in 2025. This often happens when companies are conserving cash or focusing on more efficient marketing channels. As a result of lower revenue and managed expenses, their loss from operations for 2025 was about $3.6 million. This is actually an improvement from the $4.5 million loss in the prior year. And the bottom line, their net loss for the year ended the 30th of June. 2025 was roughly $3.6 million. This is better than the $4.4 million net loss in 2024. A smaller loss is progress, but they are still losing money. Notice the weighted average shares outstanding jumped significantly from about 2.5 million in 2024 to over 3.5 million in 2025. This suggests they issued more stock likely to raise capital, and this dilutes existing shareholders, meaning their pie slice gets smaller. The cash flow statement tells us where the cash is coming from and where it is going. In operating activities, they used about $2.4 million. This means their core business operations are burning cash, which is expected for a company at this stage, but still a critical figure. They invested about $378,000 in capitalized software. This shows they are still investing in their technology platform. And here is the lifeline financing activities. They brought in over $3 million from selling common stock. This is very likely what is keeping them afloat. So as of the 30th of June 2025, they had about $2.4 million in cash. Given their consistent cash burn from operations, they will need more funding soon, unless they can drastically increase revenue or cut costs further. Now for the juicy part, the risks. Every company talks about risks, but Amesite's are particularly stark. This is the big one. The report explicitly states there is substantial doubt about their ability to continue as a going concern. This is not a small thing. It means if things do not dramatically improve or they secure significant new funding, they might not be around in the next year. They have recurring losses and negative cash flows, and management itself isn't sure they have enough money to operate for the next 12 months. They are open about their past losses and the need for more money and the uncertainty of ever becoming profitable. This is brutal honesty. They had net losses for the years ended the 30th of June, 2025 and 2024, with losses of around $3.6 million and $4.4 million respectively. They acknowledge that their customers depend on them for stable platforms and ease of use. Any failure here could lead to a loss of trust and customers. This section is a red flag. They admit they have a history of losses, will need substantial additional funding, and may not achieve or sustain profitability. Their common stock value is extremely low at just $0.0001 a share, and they had over 4.5 million shares outstanding as of the 30th of June, 2025, a significant jump from about 2.5 million the previous year. This massive increase in shares often means more stock was issued to raise capital, which dilutes the value for existing shareholders. In their notes to the financial statements, it is confirmed they sold over 1.2 million shares in a public offering in January 2025, bringing in about $3.1 million in net proceeds. This is that lifeline we saw in the cash flow statement. They also issued shares for consulting services and to directors, which is common but further dilutes ownership. The auditor's report is crucial. For the 30th of June 2025, it states the financial statements present fairly, but then immediately flags the going concern issue. This means the auditors agree that there is substantial doubt about the company's ability to continue operating. For the 30th of June 2024, the same auditor Turner Stone & Company LLP issued a similar report highlighting the recurring losses and negative cash flows, raising substantial doubt about going concern. It is important to note that Novogradok & Company LLP took over as auditors in 2025. What does this all mean for Amesite Incorporated? They are in a tough spot. The pivot to nurse magic in healthcare is a smart strategic move given the market size and need for efficiency tools. However, revenue is down and they are still racking up significant losses. The explicit statement about substantial doubt regarding their ability to continue as a going concern is a serious warning sign. It means they are heavily reliant on future financing, and without it they could face serious financial trouble. Their strategy of offering a free B2C app to gain traction and build credibility for their B2B enterprise solutions is a common and potentially effective approach. The growth in community followers shows some promise for their marketing efforts, but the financial reality is stark. They are burning through cash, and while they reduced some operating expenses and brought in new capital through stock sales, this has diluted existing shareholders. The risks they highlight are very real. Compliance in healthcare is complex, competition is fierce, and cybersecurity is a constant threat. Their heavy reliance on key management personnel and the intense competition for talent are also significant concerns. In essence, Amesite is a company with a promising product in a growing market, but facing serious existential financial challenges. Their ability to secure more funding and execute their healthcare strategy flawlessly will determine if they can overcome the substantial doubt about their future. It is a high reward scenario, and right now the risks are very visible. Alright, that is our deep dive into Amesite Incorporated's latest report. What do you think? Are they on the path to recovery, or is this a company facing a very uncertain future? Let us know your thoughts in the comments below. If you found this analysis valuable, hit that like button and subscribe for more decoding of financial documents. And definitely check out our Discord server linked in the description. It is the perfect place to continue the conversation. Thanks for watching, and I'll see you in the next one.